Bitcoin pushing up. Again, risk on in the market. We see the stock market moving up, closing in on all-time highs. Bitcoin is moving up. Now, Bitcoin is making lower highs here, or right here, high, lower high, but doesn't mean it can't push through. We are back above this little level. The one next level I'm now watching on this is this downsloping line here. So Bitcoin will meet its next resistance at around 109,500, 109,500 to 110,000. If it can punch through there, you have a shot at making a new high just around the 113,000 level. But again, I strongly encourage everyone that's into trading Bitcoin. Long-term hodlers, this doesn't matter, right? I mean, if you're long-term, I still like Bitcoin longer term. But shorter-term investors, you got to watch the stock market. As long as the stock market's going up, Bitcoin should grind higher. If the stock market stalls out, that's where trouble can arise, as we've seen in recent history on Bitcoin.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway breaks down Bitcoin and crypto trends, explains key insights, and explores future moves. Let's watch and learn more.
Gold inching a little bit lower, although hasn't taken out yesterday's lows. The big level on gold is not too far away, $3,280, $3,280. That'll be a test of this trend line. And if it does test, then does it break and confirm? If it breaks and confirms, you'll have some support around 31.25 and then 29.60 or so. So again, things to watch there. Obviously, overall, the longer term, even if we go to 29.60, you'll hear a lot of bears coming out of the woodwork. But I think it's important to put it in perspective. Even a pullback to 29.60 is here only. And look at the uptrend that we've had, right? So, I mean, that would only be, if we look at a Fibonacci and we just do it from the beginning of the bull market move here, that's not even a 382 Fibonacci retrace, which would be around 2,800 on gold. So again, keep it in perspective. Short term, a break of that trend line on the daily chart right here at 3,280. Yeah, you could go down, to 3,100, maybe even below 3,000. But on the bigger time frame, the longer time frame tells us that it is still bullish on the charts. All right, silver today. Remember, silver had that breakout, but then kind of stalled out, which was disappointing. But in all fairness, I haven't bought it yet. I sold my position up in this range. Then it looked like it was breaking out. And I said, guys, I'm going to wait for this 34.50 area. And honestly, maybe we'll get it. Maybe we'll get that pullback. I still like silver for going higher, but I'm just trying to be a disciplined investor. And if I miss it, I miss it. But still 34.50 is my level to watch. So yesterday I did exit all of my oil short. I took half off the table on this dip here and then the rest over in this range. And then you know what I did? I flipped it into a long. Why? Because the chart told me to. Remember, emotion means nothing in trading. It's all about the charts. And this had me shorting up in this range. And a lot of people said, oh, he's crazy to do that. But that's emotion speaking. Charts were telling me, no, that's a short. And then as it comes in, all right, we've made our money on the short. Now I think we're due for a little bit of a bounce on oil. And so right here, look at this, retrace right here to this level. You almost had like a little inverse head and shoulders. Do you guys see that? I'll draw it in if you don't see that. But this is a great bullish pattern right here. There's your head. And we talked about it, how it's a little wonky, but still, you can still kind of make it out. And then the breakout right here. And now it's retraced to essentially the neckline of the inverse head and shoulders. And that, again, is a buy. Now, I want to be clear on this. This isn't something that I'm looking for oil to go back here or higher. This is just a shorter-term bounce, maybe back to $68 a barrel. I grab my short-term money, and I say thank you very much.
Bitcoin miners just hit a brutal low, facing one of their worst paydays in over a year. According to on-chain data from CryptoQuant, daily mining revenue has plunged to just $34 million, marking the weakest profitability since April in echoing conditions, not seen since July 2022. The drop is being blamed on two major factors: a sharp 50% cut in transaction fees and a painful 15% slide in Bitcoin's price. For miners, both these metrics are essential lifelines, and seeing them crash simultaneously has been a serious blow. The timing couldn't be worse as Bitcoin hovers around the $108,000 resistance level. While this price might sound high to many, the recent volatility and fee slump have eroded the income stream for miners who depend on steady block rewards and transaction fees to stay afloat. With electricity costs rising and competition stronger than ever, many small-scale miners are now struggling to keep operations going. At the same time, whale activity shows mixed signals. Smaller whales, holding 1 to 10 BTC, are redistributing their coins, while the bigger players are accumulating. This divergence, noted by Glassnode, suggests uncertainty is still hanging over the market. For Bitcoin miners, it's a tough wait, and the road ahead remains rocky unless conditions improve soon.
All right, next up, natural gas. What a drop on that. Take a look, guys. Look at where it is. I actually think natural gas could be due for a little bounce here. I still think longer term it's going lower, but could a bounce come in? Look at, again, 4 days now down in a row. Here's 2 trend lines. We're right in the midst of them. There should be some support here on nat gas for a potential bounce back. But again, same thing like oil, small bounce, and then my guess is we head lower on the charts. All right. So again, just lots going on here today and a lot of different angles here. We obviously have Jerome Powell. And by the way, we have also new home sales at 10 o'clock, which kind of get overshadowed by everything else going on. But, new home sales, it's not going to be hugely market moving, but it will give us insight into the housing market, which is pretty horrendous right now, if you're kind of tuned into that. But then Jerome Powell speaking, shareholder meeting for NVIDIA, and then Micron earnings. That's the big events throughout the day. And obviously, we always have to keep an eye out for Truth Social posts by the president, and also any upheaval in the Middle East, any kind of resumption of tensions and missiles being launched type of stuff.
Despite Bitcoin hitting fresh all-time highs in 2025, some of the most legendary holders, the so-called Satoshi-era miners, are barely selling. According to new research from CryptoQuant, these early miners have only sold 150 BTC this year, a massive slowdown compared to nearly 10,000 BTC sold in 2024. These miners, active since Bitcoin's earliest days, usually take profits during bull runs, but this time they're flipping the script and holding tight. Meanwhile, larger miners are also bucking expectations. Since April, they've added around 4,000 BTC to their reserves, pushing their total holdings to 65,000 BTC. This surprising trend comes even as miners remain extremely underpaid, with daily revenue falling to $34 million on June 22, the lowest level since April. Fees have dropped, and Bitcoin's price, although still near highs around $107,000, hasn't provided enough of a boost to offset this decline. Adding to the pressure, the network hash rate fell 3.5% over the last 10 days, the biggest dip since July 2024. Yet even under financial strain, miners are keeping their coins off exchanges. CryptoQuant suggests their 48% operating margin is allowing them to endure short-term pain for long-term gain. This growing hodl mentality, especially among the oldest players, suggests confidence in higher prices still to come. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.